Thank you to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ.
Hey, Sip.
Good morning. Good morning. Finally getting some action in the markets, and
Been
it's
pretty boring this week.
even into last week, right? We've been waiting for something to make a move. And today it's the inflation numbers again, and it looks like we're heading down. And right before we started the show, we were looking at the charts, and it's all over the news. So what are you seeing on your end?
Well, let's start off with how boring the week was. There wasn't really anything mentioned this week. So like you said, I'm just going to parrot everything you said. We were just waiting, and you can see that in the charts. If I pull up your chart here, you can see that last week, end of last week, all of this week, boring. Yesterday, we started to see some sell-off ahead of the Consumer Price Index report. And last night, we actually triggered, if I come on back over to my study that I use to determine whether I've found a top or not. Last night, we got our signal that we had found a top. And so that was kind of cool, but I always am a little bit worried about those confirmations because, in the last, we had these like 1 day confirmations. So I said, hey, we got a confirmation last night that we had found a top, but let's give it a day. Well, as of just this morning session, I don't think we have to give it a day. You can see that we clearly have continued on this crossing. It's not just a little 1 day foray and reversal. So we know that we found a top. That top that we found was back on June 2nd. And interestingly enough, that top went right to the level that I had been telling people it would go to. It went to the bottom of that level, but it went to that level anyway. And so I'm happy with that, meaning that just further solidifies that we're selling off. We're in a downtrend. And then sure enough, I've redrawn my ruler here. This is called the Fibonacci price retracement lines, but it's basically just a ruler. I don't believe in all the magic that people put behind the Fibonacci price retracement lines. In fact, the reason why I think they work is because so many people use them. So it's kind of like a self-fulfilling prophecy. But as you know, my next price threshold is right here. And let me zoom in a little bit so you guys that are watching live can see what I'm talking about. My next threshold that I'm looking at is $3,835. So $3,835. And this is a threshold that I think we're going to go lower than. And I don't know how much lower. It doesn't matter to me. It just matters to me that I go lower than 3,835. If I go lower than 3,835, I've got just that much more evidence that things are selling off.
Yeah, and the beautiful part about Trading Trainer and the program and the strategies that you implement is no matter which direction the market is going, there's opportunities to make money to the upside and to the downside. And this right here is starting to set up nicely for some of those downside plays to become profitable.
Yeah. Okay, so let's go back to what you brought up. So you brought up the fact that the Consumer Price Index, after having such a boring week, the Consumer Price Index came in. And if you take a look over here, I already have it pulled up. The Consumer Price Index came in, and everybody's taking a look at the fact that 8.6% year over year inflation, right? The Fed likes these numbers to be around 2%. So things are going up in prices along with wages. But wages, of course, everybody's excited when they make more money, but not if they have to go to the gas pump or the food store, grocery store, and get spend that much more. Now, if you factor out food and energy, and a lot of people, everybody looks at the bottom line, right? Everybody looks at this 8.6, and they were looking at the fact that it should be 8.2. And then you look at things like fuel. If you look down into the details, fuel is up like in double digits in just the last couple of months, and food is very high. When you factor out these are very volatile. They've always been volatile, and so this economic report factors that stuff out. And when you factor that out, actually the inflation was right where we expected it to be. But fuel and food is kind of what Americans live on. And so if people are spending money on fuel and food, everything else is going to get put to one side. People are going to hold off on doing those remodelings, hold off on buying that new refrigerator, hold off on buying that new car. Everything goes to the side when you can't afford fuel and food. So people are freaking out. Now, I got to say, this consumer price index isn't really the reports that the Fed uses. So why is there so much hysteria? Well, it's because this is really newsworthy. So it's kind of like it's in the it's in people's minds. It's a measurement, and people are reacting to what they're hearing. This isn't necessarily. It's more like hysteria. Like Chicken Little, the sky is falling, then it's actually the numbers that the Fed is paying attention to. But it still creates that fear, which results in selling, which is what we're seeing in the markets.
Yeah, and it seems as if it's going to affect any of the upcoming decisions. The next Fed, I think that's what everyone's going to be looking at.
That's exactly what people are afraid of. They are afraid that the Fed is going to be more drastic. But I got to tell you, we keep coming back here, and I keep, harping on these numbers here, right? This is that everybody focuses on the Fed interest rates. And, the Fed has said that they're going to do a 0.5 point rate hike. I don't doubt that they're going to, next Tuesday and Wednesday is when they meet again. And I don't doubt that another 0.5 point rate hike. I don't think they're going to 0.75 point, which would cause, justify all the hysteria today. They're not going to do that. I think they're going to stick to their playbook. And the reason is this, what I'm looking at right here on my screen, what you guys are looking at too. A lot of people, and I was talking to my group last night, and they didn't even understand this either. This is a tool that the Fed is using that a lot of people don't understand. They understand interest rates because it hits home. They don't understand that the Fed has been meddling with the markets since 2008. And it shows here how much kind of money they've made out of thin air in order to buy bonds in the bond market, which has really changed the dynamic for everyone. But in April, they made an announcement that they were going to stop buying bonds, and they made an announcement that they reaffirmed in May that they're going to start selling them back in quantity. And I just want to point out something that they've done that a lot of people don't have on their radar. So from about, this is about 45 days. So this is the last 45 days. In the last 45 days, the Fed has sold off about $50 billion. When I say they sold off, they basically have taken $50 billion out of the economy and disintegrated it. And that you can see kind of what has happened as a result with the sell-off in the markets, with when you take that kind of money out of the economy, everything is going to shrink a little bit. And that's the Fed's intention. Now, what they've said is by August, they want to be disintegrating around 95 to 100 billion dollars, not every 45 days, but every month. And they've said that kind of in the minutia of their reports. But you see what disintegrating $50 billion in 45 days has done. Wait till they hit the accelerator on that. I don't think they're going to do anything different than their playbook. And so I I think what we're seeing today because of the CPI is just a lot of hysteria. I think they're going to follow their playbook, but their playbook is quite aggressive. In fact, they're talking about selling 95 to $100 billion per month all the way for the next like 3 or 4 years, all the way to 2025, 2026. So that's going to have, that's a short-term pill that's going to be difficult to swallow, but it's going to make things nice towards the end of this decade. But can people survive the next 3 years? We're going to find out.
Yeah, and the average investor may become a bit concerned because the hold and let the economy grow is not going to be a play, as you said, that you might be able to make for 2 to 3 years. And so, what can we do to take advantage of that? Let's trade some options, right?
That's right. So last night on my call, I had explained all this and people were like, "Oh my God, I didn't understand quantitative easing up until you made this explanation." And then they're like, "This seems pretty sour for the next 3 years." And I said, "No, right? Because here's the scoop. Money is not, money doesn't, when you invest in the markets, money isn't made or created or destroyed, right? Money just changes hands, right? And so what you have to do is put yourself on the right side or the correct side of the equation. And all of us, including myself, we're little investors, which means we can't move the market. So to be a successful trader, to be a successful investor, when you have a portfolio that's less than, $500 million, you have to follow the footsteps of the market makers, the market movers, the ones who can move the market. Follow in their footsteps and do what they do. They are selling. So we should be selling. We should be shorting the market in the overall general picture. And that also means that, to short the market, it means if you're an options trader, we can be buying puts. Just put yourself on the correct side of the equation and you will be positioned to make money.
Yeah, and honestly, some of these new investing tools like the Robinhood app and some of these other ones have made trading options incredibly easy. Like, I'm very impressed with some of the strategies and positions we talk about, how I can go and look at the opportunities. And so, if anyone's watching, listening for the first time that hasn't taken the dive into options, we're going to go ahead and invite everybody to a free webinar that AJ has every single day, where you can learn specifically how to take these positions and so on. And then let's play the little commercial. I'll put the link in the chat so anybody that's interested can see it. And then what we're going to do is go over some examples. So every week we're giving the members in the class, some of the fans, the opportunity to ask questions. So if anybody watching has a specific stock that they want AJ to look at, we'll see if we have time. Otherwise, we've got some questions from the week, and I think you've got a ticker that you have a position on. So let's run the commercial. We'll come back, invite everybody to the webinar, and we'll keep the party going.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Our first ticker of the day is TEVA Pharmaceuticals. This is a new one for me, AJ.
Yeah, this is one that we featured in our group and a few weeks ago. And we were waiting, so we planned this out. So if you guys have been watching us, what are we on, like episode 30 something?
36 maybe.
Nice. We love these boring stocks, these stocks that are not in the news, the stocks where the investors are not looking for any sort of gains. Instead they prefer to see some dividends. They prefer to see some potential gains. In other words, they get stuck in a sideways, boring channel, and TEVA is one of those companies. And so we had planned on it a couple of weeks ago, and we were looking for a signal to tell us that we should short TEVA. And when I say short TEVA, what I'm talking about is either actually physically shorting the stock, and the stock is inexpensive enough that it wouldn't be that big a deal. It does require you to have a margin account. That's where, when I say short the symbol, that means you're selling the symbol. You usually have to make an arrangement with your broker using a margin account to borrow some of their shares. You sell it at a high price in order to buy it back at a low price. And when you buy it back at the low price, you give the shares back. The ones that you borrowed from your broker, you give them back to the broker, and you make the money on the downside. But the other way to short TEVA, of course, is to buy some put options. Either one of those transactions can prepare us for selling premium. So we were looking to get into that initial position. We got a signal. You can see this little red arrow that I have here. That's my fast MACD indicator. We got the signal, and I'm also going to emphasize for everybody on the call, I'm an end of day trader, which means I look for my signals after the market is closed. And if I get a signal, I then try to trade the next day. And so I got this signal on the evening of June 6th, and sure enough, on June 7th, I got my follow-through rules met, and I opened up a short position, meaning I want TEVA to go down in price. And so TEVA is behaving just like we had planned for it to. It is going down in price, and I'm now setting up to make my premium trade. And so what we're waiting for here is wherever TEVA decides to bottom, that's when we will sell premium. Now, we're going to be selling put options and buying a protective call option. The put option is going to be near term, and the protective option is going to be about 6 months out. The 6 months out option is going to be a little bit expensive, which is fine because we're going to offset its costs with what we make on selling the premium. And then when we, in about a couple of weeks, when we form another top, because TEVA just oscillates up and down, up and down. When we form another top, we'll sell back that protective call option and make a windfall. And we're going to just repeat that over and over every month as long as TEVA lets us do this. But I wanted to say that we had this wonderful opportunity. We all either shorted the stock or bought the back month put option. And so keep your eyes out on TEVA for some nice movements in the future.
Yeah, and so you're saying you're looking for it to hit that bottom there, maybe in the next 2 or 3 weeks. Where
Yeah.
is the next leg of this trade, or at least on the calendar?
And that's the beautiful part, Sip, with our options trading is it doesn't matter when or where it bottoms. We just play it day by day. Once it does bottom, if it decides to bottom here, or if it decides to bottom, even lower, it doesn't matter to us when or where. We just simply react on the next day after it does bottom, and we go ahead and sell our premium, buy our protection, and just let the trade play out.
Yeah, and another thing to note on this one is the price point. I always like to bring this up, that it's in a sweet, juicy price point to get in some options at a much lower cost than if you had to buy the stock outright.
You could actually trade TEVA with a portfolio that's maybe even under $1,000. So that's kind of nice. It opens it up to every investor out there, not just the big money investors.
Awesome. Yeah. So if anybody's interested in learning how to trade a couple $1,000 portfolio using these option strategies, here's a great example of how you can take advantage. Moving on, we've got some really wonderful questions from the audience. Margaret from Salt Lake City is interested in, wow, I can't even read my scribble here.
The Container Store, I think,
The
right?
Container Store, right? Actually, a store I've been to.
Yeah, Liza loves this store. She likes to keep me organized, and she likes to keep herself organized. We have all sorts of organizing systems that she's bought at the Container Store. Okay, so echoing on what Sip just said, low-priced underlying symbols is never a bad thing. It opens this type of trade up to the rest of the public, which is great. Let's also look at the options chain. All right, so when we look at the options chain, it's kind of slim pickings. Let's take a look here. I mean, so what we're looking at here is the calls on the left side and the puts on the right side. You can see that the options are being traded every $2.50. And so what that means is when we go and do some of our strategies, we can do a zone at 10, we can do a zone at $7.50, and then down to $5. In other words, these are compared to the price of the symbol, these zones are quite large. Like we have to do these huge steps. We usually like to find symbols that are trading every dollar because then you have a little bit more granularity. What I'm thinking about on the Container Store for, I think this is Marjorie in Salt Lake City, is that this isn't one of the best options plays if we're going to be trying to sell premium. However, I'm looking at the I'm looking at this January 2023 put option, and if I wanted to simply leverage the amount of money I'm spending in order to trade the downtrend, in other words, what we've been talking about, we want to be shorting the Container Store because obviously there is this downtrend happening here. So we want a short Container Store, and to do that, we could buy some put options. And it looks like there's a little bit of liquidity on the put options. I would rate this as a little bit more complex of a candidate to sell to trade with options. If you just wanted to short the Container Store itself, just do a traditional shorting on the Container Store, that could be a useful trade as well. I'm not seeing a lot of benefit of using options on the Container Store.
Great. And that's why we appreciate your insight, AJ, because sometimes the check marks line up and sometimes there's just not a play there. And
It doesn't fit, right?
yeah, so we keep looking because there's thousands of opportunities where things line up a little cleaner. And maybe one of our guests has a winner. And moving on to the next question. This is Ned from Las Vegas, interested in a Las Vegas favorite, Wynn Resorts.
Stephen Wynn,
which is an establishment I've been to before.
Yeah, me as well. They're nice. Okay. I like Wynn Resorts. It's a little bit on the higher price side, although it looks like it has come down just a couple of months ago. Interesting enough, we've been talking about how people will be spending more money on food and fuel just to get to work this summer. So you almost think that these hospitality type sectors will see a sell-off. With that said, it looks like Wynn Resorts is having a little bit of a pullback. I almost feel like this could be a nice swing trade down. We're getting a pullback and we might be getting a signal. In fact, I've already developed on the Fast MACD an indicator. So maybe this evening going into next week, we would figure out how to short Wynn. Let's make sure we look over at the option chain. Oh, okay, great. So in contrast to the Container Store, you can see, first of all, we're trading just about every dollar. Sometimes we're trading every 50 cents. Yeah, look at this January 2023 option. We're trading, okay, here we're trading every $2.50. Let's look at the September option. trading every $2.50. But in this case, because the underlying symbol is not, $6, it's $65. If I show you now the increments every $2.50, you can kind of see I've got a lot of possibilities because $2.50 compared to the going price of the stock, I can still set up nice trade zones with this granularity. That's the difference between trading against a $67 or $70 stock and a stock that's $6 when you have $2.50 increments. So I'm good with that. I'm also good with, the open interest here. The open interest is in the hundreds, if not thousands, on both the call and the put side. The bid-ask spread, in other words, there's actually people trading these options. And so we can get in there. There's all sorts of choices for trading it all the way up to January 2024. We've got near-term options that are heavily traded. So great. We've got a market. We've got options we could trade. So the idea is to identify the pattern. I'd be looking at Wynn Resorts as a swing trade down. And then, of course, once I got into that swing trade down, what I'd like to do is put on some sort of measurement about how far down I think it will go. And if it falls short of that measurement, I'll do a hybrid trade. I'll sell some premium and make some short-term income on it. So I think Wynn Resorts, we can trade it right on the threshold between being a swing trade and being a premium trade. That's the beautiful part about options. We can adjust on the fly. And if it's not giving us the returns we want on the swing trade, we could sell premium and make a little income while we're waiting for the swing trade to recalibrate.
Yeah, and I'm curious to learn more about this correlation, right, with commodities and fuel prices and food prices going up versus how much less people are spending on entertainment, right? I imagine that has been something that we've seen throughout history, and this is a great way to take advantage of that theory.
Yeah, Wynn Resorts, Las Vegas Sands, Caesars, those are all in that sector that tends to be the first one to sell off when there's inflation worries.
Yeah, and that kind of rolls into our next question, next stock to look at, and that's in the retail sector. So George in Kansas City, Missouri, is interested in. I think this is a name that we may have gone over when we did some of our retail chat, but TJ Maxx, which is the owner of a few retail establishments, I believe.
Yeah, like Marshalls, Home Goods, TJ Maxx. This is TJX. This is the umbrella company. Yeah, I mean, I have to be honest. I've sold premium against TJ Maxx for like the last 15 years. It's a company that tends to create the patterns we want to see. That they're rarely in the news, which is great for us. They tend to just have investors that want to see it keep going. They pay off nice dividends, so the people who invest in TJ Maxx don't necessarily care if the stock price goes up because they get their quarterly paycheck. And so that creates an environment for us to be selling some healthy premium. The option chain, as I can show you here, there's plenty of open interest, small bid-ask spreads. There's a lot of potential for selling different options or buying different options. So there's definitely a market for us. Looking at this pattern, it looks like TJ Maxx or TJX companies has stalled around the $60 mark, and it's just oscillating. So that just sets us up well. It looks like I got a shorting signal back on June 3rd, and it looks like on June 6th, which was the Monday after June 3rd, we did get follow through. So if you shorted TJX companies back on June 6th, I think that's great. I think we might have, especially with the drop today, missed some opportunities if we didn't sell it, up here at the $62 mark. We're already down at the $59 mark. George, I think maybe we're a little late to the game. However, you never know. We might get a rebound next week on Tuesday and Wednesday once the Fed announces their moves. And I think that we're seeing a little bit of a hysteria today on the CPI report. I think that might get reversed for a couple of days next week when the Fed releases its actionable items and they don't surprise anybody. So we might see some short-term buying, and that might be a second opportunity to get into TJX and short it. But that's what I would be doing. I'd be shorting TJX and then looking for premium selling opportunities, just like we talk about in that free workshop that we run every day.
Yeah, and just to double check, the liquidity is here for this to trade
Yeah.
options, right?
Yeah,
Okay.
there's a lot of liquidity. There's a lot of people trading options against TJX. There's a healthy market. We can get in there, buy and sell, and not have any problems.
Awesome. So, George, hope that that answer was helpful. Um, yeah, this CPI number is kind of leading the charge here, and we're starting to get close to that. At least while we're recording this, we're still going down.
And look
So,
at the VIX, Sip. I just pulled a chart up of the VIX. So the VIX measures implied volatility basically on the S&P 500. Implied volatility is not historical volatility. Implied volatility is what people are believing is about to happen. And so you can see this in the VIX. It basically means when people are afraid, when people have some fear about their investments in the markets, they tend to buy options as a hedge. They buy options in order to protect themselves. And when they buy the options, of course, the option prices then go up because whenever there's a demand for something, the price goes up. And so the VIX is showing that demand in just the last 2 days, it was slowly but surely, coming down a little bit. This dotted line here shows the VIX mean, meaning this is currently the VIX has been riding high for a while now, and it was coming down. And then just in the last couple of days, we can see here that the VIX is just shooting up, which again, if people are paying top dollar for options, think about it in your head, right? Where should we be in that transaction? If people are buying options, what should we be doing? Selling them. That's how we're going to make money. See, the people who lose money when the markets start to sell off are the people who are stuck in the traditional mindset that we should buy something and hold it for a while and let it appreciate in value. Well, you're the ones who are going to see, your fortunes dissolve. If you've got money in mutual funds, ETFs, or in stocks, and you have them where you bought them and you're hoping that the price will appreciate, you're the ones who are going to transfer your wealth to somebody like our option traders who are prepared, who are selling, right? Our option traders are selling, and because we're selling and you guys are the ones buying, we're on the side that are going to be making the money. It's all about what side of the equation you're putting yourself on, right? You still there, Sip?
oh, that's my bad. I turned the microphone off there for a moment. I got construction taking place on the street. I didn't want to ruin the
No
lingo,
worries.
but I just pulled up the workshop page, right?
Nice.
So I really love the point that you're bringing up in that, we're looking at all the technicals, we're seeing the fundamentals. Things are going to be going down. The market is going to be going down, and as traders, as investors, options allow you to make money. And like, I love that premise. And so if anybody's serious about learning these strategies, head on over to the link, sign up, watch the webinar. AJ breaks it all down, very recent examples. And that's why we do the show, because there's money to be made. And I really just want investors, traders, at least the new ones, to know that that's the beauty of the markets. That's the beauty of trading and trading options, is you can make money up, down, sideways. You just kind of have to get in there and start learning the strategies, putting some trades on. And it's not too difficult when you get in there.
Well, let's just break it down. Stocks, the market looks like it's going to be selling off in at least the short and middle term, if not for the long term. So if you're interested in options, we have these things called put options that allow you to make money when the market sells off. So that's a plus for options. But then also what I'm showing you on my graph right now is what's called implied volatility. And implied volatility is high. And right now it's even going higher. And so another way to be making money is to be selling into that implied volatility. We're having an implied volatility rush. You can't make money if you're just investing in stocks on this volatility play, but options can profit on volatility crushes and rushes. So again, if you want to put yourself on the right side of the equation, if you get into options now, or if you get into options in a way that you haven't gotten into them before, by knowing how to profit on volatility changes, by knowing how to profit when the market goes down, options are a tool. And I've been specializing on this since 1997 in order to make profits or put yourself on the correct side of the equation whenever things like this happen. So now is no better time than for you to learn some of these option strategies.
Yeah, and we invite everybody to jump in that webinar, leave any questions in the chat, hit us in the DM, hit that follow, hit that subscribe, smash that like button if you're enjoying the content. We do appreciate all the questions, right? The analysis, but things are looking like they're going to be turning down, which is why every analysis seems to be, oh, how can we play this to the downside? How can we play this to the downside? Which is, it's great for options trading, options traders. So we invite everybody to come and join into this rush that we've got going. And how long would you see that down market, taking place? Are we talking into the fall, right? Through the summer and into September, October?
There's the two components, Sip. There's the actual stuff that's happening with the economy, the actual actions that the Fed is taking, the actions that there's monetary policy, and then there's also fiscal policy, right? The budget of the government and where the government is going to spend money. And, there's that. And then there's these news tidbits that cause emotional buying and selling, which actually I think have more effect on the at least the short-term markets than even the concrete steps that the different powers that be that run the economy are taking. With that said, it's hard to prognosticate that kind of stuff, but the Fed's going to be dissolving cash. They've said that they're going to be dissolving $4.5 trillion worth of cash by 2025. So there's going to be a tightening, at least for the next 12 months, in what we see happening. And so, again, being on the correct side of the equation, right? Making sure that the markets allow you to do that. The different products allow you to do that. They allow you to make sure, because markets only allow money to change hands from one person to the other. It's not about destroying cash or creating cash. Markets just allow money to go from one hand to the other. So make sure you're on the receiving end, not on the shipping end, because you want to be where the money comes. There are people who make money in down markets, and I'm one of them.
Yeah, and if we're going to be paying more for fuel and food, we might as well make it back with some profitable options trades. Why
Absolutely.
not? All right.
Absolutely.
Wonderful, wonderful show. Are you doing anything this weekend, AJ? Anything exciting on the books?
Well, we are preparing to hit the road. We're going to go up to Montreal and Quebec City for next week. In fact, I'll be broadcasting next Friday's show from probably our hotel in Quebec City. A little interesting fact, Quebec City is the only city in North America that has a wall built around it. The French Canadians at the time, when they built the wall around the old city, were afraid the Americans were going to attack them. Of course, the Americans were like, that's too cold up there, so we're not going up there. But so it's kind of fun. I lived there for 2 years from about 1998 to 2000. So I haven't been there in about 20 years, to maybe even a little bit more, 22 years. So I'm going to go back and visit. We've got some people to see in Montreal, some people to see in Quebec City, and it's kind of a really romantic city, and plus it's nice, and the temperatures are nice and cooler than they are here in Washington D.C. So that's what we're planning for the weekend. We're also just watching this VIX over the weekend, and we're going to be planning. That's what I do over the weekend, is I plan to make make the right moves in the markets for the upcoming week.
Yeah, and that's the type of guy that if you want to learn how to trade, this is who you need to be learning from. AJ is always in tune, always putting in the work, but utilizing these systems and these strategies that have been proven for so long. I do have one recommendation to the audience. I watched the new Adam Sandler movie Hustle on Netflix. Shed a couple of tears. Highly recommend it if you're looking for something inspirational. I would definitely put that on the radar.
What was his movie that he did like a couple years ago that was just like amazing? It was not a comedy movie.
Gemstones.
That was awesome.
Right?
So is that
Uncut Gems? Uncut Gems.
Uncut Gems? I thought that was brilliant. So is this on the same par as that, or even better?
On par if you're a basketball fan, because it's basically about a basketball agent, and it's about Philadelphia. So if you're on the East Coast in that area, you might. Otherwise, it's just a good story, underdog story of making it into the league, and just thought I'd recommend it because I did enjoy it.
I'll check it out.
And
I think everybody else should too.
I still got to check out the new Mission Impossible. I'm hearing good things.
Oh, I didn't even know about that one.
Yeah, Tom Cruise. He looks the same 35 years apart, kind of like you, AJ.
You mean the Maverick movie? The Top Gun.
Top Gun, not Mission Impossible.
Yeah,
my bad.
What they do, they did like some sort of technology thing to make him look young.
Did they, or he just looks like that?
He just looks young.
It must be the Scientology.
Yeah, Scientology, or a good cosmetic surgeon. I don't know.
All right,
filler and Botox.
Hey, it's a thing.
Actually, speaking of that, one stock that we trade often is Allergan, and so maybe people want to look up Allergan. They make the Botox, so I just thought of that. Maybe we'll feature that in an upcoming week. Allergan.
We'll see what how Botox sales are doing in 2022.
Exactly.
All right, AJ, appreciate the time. Appreciate the insight. Have a good weekend. Everyone else, thank you for tuning in. Have a good weekend. We'll catch you next week.
Bye, everybody.